This is Don DiBartolo. I am a senior commodity broker with Daniels Trading in Chicago, and I am the publisher of the Trade Spotlight Advisory Service. Trade Spotlight is broken into three segments: the Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Futures Spreads. This is the Beyond the Spotlight video. It spotlights 2 or 3 markets that may become trading opportunities for the week ahead. The week in question starts with Monday, October 15th, 2018. Before we look at the markets, please pause the video, read through the risk disclosures, make sure you understand the risks involved with trading futures and commodity options. And let's take a look at what the Trade Spotlight email looks like. This is delivered directly into your inbox. There is a timestamp so you know the date and time the recommendation was sent. I will have a write-up on the trade recommendation. I will provide the precise entry order, the margin requirements, if it's a future spread, or writing an option. I will detail the precise stop loss and target so you understand the risk reward ratio with each recommendation. And then the chart of the trade in question. Click the link. It'll pop up a screen that'll show you the chart with all my markings on it. Okay, let's get into it. The first chart is the December 2018 British Pound futures contract. What you can see here is a big pennant formation drawn off with 3 touches on the top, one near the beginning of June and then 2 more recently, and almost 3 touches on the bottom trend line. Almost a double top formation here too, even though the time frame is really too small to consider it a double top. What I'm looking at here is a potential opportunity to the downside. The MACD shows that the trend is waning, and the stochastics show that the market is potentially overbought. The market struggled to break through this trend line once again and had a sell-off on Friday. A break of this 20-day moving average potentially sets up a trade to the downside. Now the market can trade down to this trend line and this 50-day moving average and stall out, so a stop loss would be trailed. But if the market can break through here, there's a couple levels. That low that you see there is 129.67, that pivot point low. If the market can break through there, I believe the target is down near the contract lows. This low is 127.35 from August 15th. That would be where the target order would be placed. Potential stop loss, definitely above this trend line and these recent highs. Ideally above this stop, or this high here. This high is 133.50 from the September 20th. Just would love to be above that level if the risk-reward ratio does indeed make sense. The next chart is the December 2018 Chicago wheat. I have an upward trend line drawn off with 1, 2, 3 touches and several others that are close. I'm looking for a trade to the upside in this market on a break and close above this trend line. There's a huge support level down below. I'd say this low right here is 505 even, and that's the low from the 2nd of October, 505 and a quarter actually, 505 and a quarter. So that support level, the market bounced off there 3 times. Again, a break and a close above this trend line would trigger an entry to the upside. Right now the trend is flat, and the stochastic indicator showing a market that doesn't have much momentum. Potentially it was oversold and has the potential to hook back up. A stop loss would go below this support level and even probably below the $5 level. I like to stay away from those even numbers. This low right here comes in at 495 and a quarter. That's one spot, or even going back to the 12-month contract low. This is 490 even from the 11th of September. So those are potential places for a stop loss. Obviously down here provides more breathing room on the trade. There's a 20-day moving average hooking up. This 50 200-day moving average is angling down. A crossover of those two trigger a bullish signal. That's an even stronger confirmation. That would be ideal before taking a long entry. Now the upside target would be this the 50% Fibonacci retracement of this contract high down to this contract low. That 50% level is 555 even. That would be a first target. Potentially then the second target would be up in these highs above the $6 level. The last chart for today is the March 2019 sugar contract. I actually have a trade recommendation working for this market, no fill yet. You would have received this email on Thursday, so check your inbox or contact me directly if you need the trading details. I'm working in order to sell on a break of this pivot point low. That pivot point low is 1262. So I'm working in order below that level to sell the contract. When I placed this recommendation, we only had this chart's data point, but taking into account Friday's trading session, yes, the market did rally and break above where my stop loss is, above these highs and this upper trend line. But you'll notice that even though it made a high up here at 1328, the market closed below the 200-day moving average, which is 1317. That was key for me to want to continue with this potential trade to the downside. Now I may consider moving the stop loss above this high. That would be an additional 9 points from where I have it now. That's a risk of another $100 approximately. So that may be something I consider. Depends on how the market shakes out over this coming week. The downside target are these lows down here. The 12-month contract low is 1080. So looking for a breakdown back to the 1080 level. The trend is waning. The stochastics show a market that is potentially overbought, and the volume was decreasing here. So again, looking for a sell-off to the downside. This order is working. If you don't have that email, contact me directly. Here are my contact details. You can reach me on local, cell phone, or toll free. Or feel free to email tradespotlight@danielstrading.com directly, and I will receive that email. If you're not a subscriber to the Trade Spotlight advisory service and you wish to do so, just go to my firm's website at danielstrading.com. There are tabs that run across the top of our webpage. Click Advisories, and then under Technical Analysis, select Trade Spotlight. You will find this page. You can subscribe now for a free 90-day trial. After 90 days, if you'd like to continue with the service, it's $99 a quarter. If you are a client of mine or a client of Daniel's Trading, this service is provided to you at no cost, so either contact me or your Daniel's Trading broker to access this advisory service at no cost. Thanks for listening and happy trading.